Welcome back to our video course on the basics of personal finance, budgeting, saving, investing, and managing debt. In this video, we will be discussing the basics of investing and how to choose the right investments for you. What is investing? Investing is the process of putting your money into assets such as stocks, bonds, real estate, or mutual funds with the expectation of earning a return on your investment. Investing can help you grow your wealth over time and reach your financial goals. Why invest? Investing is important because it can help you grow your wealth over time. It's also a way to protect your money from inflation, which erodes the purchasing power of cash. Investing can also provide a source of passive income, which can help you achieve financial independence. Risk and return. When it comes to investing, there's a trade-off between risk and return. Generally speaking, investments with higher potential returns come with higher risk. It's important to understand your risk tolerance and choose investments that align with it. Types of investments. There are many different types of investments, including stocks. Investing in stocks means buying shares of a company with the expectation that the company will perform well and the value of your shares will increase. Bonds. Investing in bonds means loaning money to a government or corporation, and in return, they promise to pay you back with interest. Real estate. Investing in real estate means buying property with the expectation that it will appreciate in value or generate rental income. 1. Mutual funds. Investing in mutual funds means pooling your money with other investors to buy a diverse portfolio of stocks, bonds, and other securities. 2. These are just a few examples of the many types of investments available. 3. It's important to do your research and understand the pros and cons of each type of investment before putting your money into it. 4. Choosing the right investments. Now that you understand the basics of investing, it's important to choose the right investments for you. 5. Here are a few tips to help you make informed investment decisions. Understand your financial goals. Before you invest, it's important to understand your financial goals. 1. Are you investing for retirement? To save for a down payment on a house? Or to generate passive income? Your financial goals will help guide you in choosing the right investments. 2. Diversify your portfolio. Diversification is key when it comes to investing. It means spreading your money across different types of investments, such as stocks, bonds, real estate, and mutual funds. 1. This helps to spread risk and increase the chances of earning a return on your investment. 2. Do your research. It's important to research any investment before you put your money into it. Look into the company or fund's history, management, and performance. This will help you understand the potential risks and returns of the investment. Consider your risk tolerance. As we discussed, investing comes with risk. It's important to consider your risk tolerance and choose investments that align with it. If you're a risk-averse investor, you may want to stick with more conservative investments such as bonds or a balanced mutual fund. Understand fees and taxes. Before investing, it's important to understand any fees and taxes associated with the investment. These can eat into your returns, so it's important to factor them into your decision. Managing your investment portfolio. Once you've chosen your investments, it's important to manage your investment portfolio regularly. Here are a few tips to help you manage your investments. Review your portfolio regularly. Review your portfolio regularly and make sure it's still aligned with your financial goals and risk tolerance. Rebalance your portfolio. Rebalancing your portfolio means adjusting the mix of investments in your portfolio to make sure it's still in line with your financial goals and risk tolerance. Stay the course. Investing is a long-term strategy, and it's important to stay the course even when there may be market fluctuations. Don't get caught up in short-term market movements and avoid making impulsive decisions based on emotions. Instead, stick to your plan and remember that over time, the stock market has historically trended upward. Keep an eye on taxes and fees. Keep track of any taxes and fees associated with your investments and make sure they are in line with what you expect. Seek professional advice. If you have any doubts or questions regarding your investments, it's always a good idea to seek professional advice from a financial advisor. Conclusion. Investing is a powerful tool for growing your wealth over time and reaching your financial goals. By understanding your financial goals, diversifying your portfolio, doing your research, considering your risk tolerance and understanding fees and taxes, you can make informed investment decisions. Managing your investment portfolio regularly by reviewing it, rebalancing it, staying the course, keeping an eye on taxes and fees, and seeking professional advice can help you stay on track and reach your financial goals. Remember to invest for the long term, stay patient and stay diversified.